Now that I've addressed the payout options on a fixed annuity to an annuity beneficiary, I'm going to address the tax implications of a death benefit to the annuity beneficiary. So given that a fixed annuity is a tax-deferred annuity that provides tax-deferred growth, does that mean that the death benefit is not taxable? Well, I'm sure you know the answer to that question because we're talking about the IRS here. But remember that I've mentioned that tax-deferred growth is an annuity benefits, but it doesn't equate to tax-free. I'm going to give you a refresher in this video. I'm also going to talk about payout options on a fixed annuity for the death benefit if the fixed annuity is in an IRA account, because it's actually treated differently than with a non-qualified taxable account due to changes mandated by the government at the end of 2019 through the Secure Act. By the end of this video, I'll give you the facts so that you can have a better understanding about how the death benefit is taxed to the annuity beneficiary. Hi, my name is Darlene Hartman. I'm a CPA and founder of D. Hartman Consulting, LLC. For the best retirement annuity advice, subscribe to my YouTube channel and hit that notification bell so that you can receive notices anytime I post a new video. Let's start with a quick refresher on annuities and taxes. So for both taxable accounts and non-taxable accounts such as an IRA, the taxes are deferred during the accumulation period. So that's pretty much a standard benefit for an IRA or even a qualified account such as a 401k. But for a taxable account, that is a huge benefit because you're able to keep your investment intact by not having to pay taxes on the growth, which enables you to get maximum compound interest during that accumulation period. So let's give that a 2 thumbs up. But once the annuitant starts receiving those guaranteed lifetime income streams, those payments are taxable. So remember I said earlier, tax deferred does not equate to tax free. So for a traditional IRA or a qualified account such as a 401k, those payments are 100% taxable. So what does that mean for an annuity beneficiary that receives a fixed annuity in an inherited IRA? Well, unfortunately, that means that that death benefit is also 100% taxable. If the IRS doesn't get the money from the annuitant, they're going to get it from the annuity beneficiary. Now, that's not very tax advantageous to the annuity beneficiary, is it? And is there a way to give a death benefit that would be more tax advantageous to a beneficiary? Well, absolutely. And I'll discuss that in future videos. But in the meantime, don't forget about why you obtained that fixed annuity. It was for those guaranteed lifetime income benefits, money that you cannot outlive in retirement. The death benefit is actually an additional annuity benefits offered on a fixed annuity. And that death benefit may be necessary for the annuitant who cannot obtain permanent life insurance due to a pre-existing medical condition, but would like to provide a death benefit to a loved one. Leave me a comment in the section below and let me know if you've heard of the Setting Every Community Up for Retirement Enhancement Act of 2019, also referred to as the Secure Act. So don't worry if you haven't heard of it, because I'm going to talk about it in future videos, because there's a lot of important information in there that will impact your retirement planning. Note that I said will impact, and you need to be in the know. Also, if you're enjoying this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and hit that notification bell so that you can receive notices anytime I post a new video. The Secure Act, signed into law on December 20th, 2019, made some pretty drastic changes to retirement planning. And I'm talking about mainly with taxes, just to clarify. So I'm going to spend future videos to divulge more information on the Secure Act. But what I want to do right now is talk about the impacts of the Secure Act on an annuity beneficiary for a Secure Act inherited IRA. Since the Secure Act, the tax treatment on the death benefit for a fixed annuity in an inherited IRA remains unchanged. The annuity beneficiary will have to pay taxes on the full amount of the death benefit. Now, what did change was the timing of the receipt of the payments from the fixed annuity. So due to the Secure Act, the annuity beneficiary now has to cash out the fixed annuity no later than 10 years from the date of the annuitant's passing. So that could actually accelerate the amount of taxes due on that death benefit. Prior to the Secure Act, the stretch IRA rules applied, and that's where the annuity beneficiary could actually stretch out the payments from the fixed annuity over the annuity beneficiary's lifespan. Well, no longer. Now the annuity beneficiary has to cash it out within 10 years. The IRS wants their money, or rather they need their money if you look at the amount of national debt. So do you see a lot of retirement planning in your future? One last situation that has not been addressed as of yet. So if the annuity beneficiary receives a death benefit from a fixed annuity in a taxable account, how is it treated for tax purposes? So the annuitant starts paying taxes on that fixed annuity in a taxable account when the annuitant starts receiving those guaranteed lifetime income streams. And the amount of tax on those payments is actually computed using a LIFO method, which stands for last in, first out. So only a portion of those guaranteed lifetime income streams are taxable to the annuitant. And the tax treatment is the same on the death benefit for the annuity beneficiary. So only a portion of it is taxable to the annuity beneficiary. If you're interested in obtaining those guaranteed lifetime income benefits, money that you cannot outlive in retirement, in order to ensure yourself financial security, certainty, and happiness in your retirement, be sure to click the link below to apply to become my client. Also, if you enjoyed this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and share it with your family and friends. Thank you for watching. Let's get the conversation started on how you can live your best retirement while not outliving your money.